Good morning, everybody. Mike Tedeschi over at Perspective Wealth Planning. In this week's video, I want to take a look at the four major U.S. indexes. We're going to take a look at the Nasdaq McClellan Summation Index. We're also going to take a look at some historical data points courtesy of Sentiment Trader. But first and foremost, let's jump right into it here on the S&P 500. Now, this is the first real shot across the bow that the bulls have seen since the breakout to new all-time highs back at that 30-30 level at the end of October. We had a sharp sell-off day on Monday, and then we had a news report or a rumor come out basically saying that the trade deal wasn't going to get completed until after the 2020 U.S. elections, which sent the market down the next day. The following day, a rumor came out saying that the trade deal was very close to being done and would be done before the deadline for tariffs being raised on the 15th, and we rallied back up. Now, a couple of things. First off, the news down and the news back up, we ended right where we were before the news even came out. Second off, the failure to the upside move happened at a declining 10-day moving average. It's the first time the 10-day moving average has started to decline in quite some time. So that, of course, is an area for concern. Now, on the bullish side, this is an abandoned baby pattern is what it's known as, and it's also a hammer candle. So seeing follow through again to the upside once again today on the 5th would be a bullish sign. Now, a couple other areas of concern when we take a look at the S&P 500 here, our RSI actually did break to the downside, finally. So we were above that 70 zone. You can look at this trend line, and we broke that trend line to the downside. Now, typically when you break those trend lines, you have a little bit of follow through to the downside. So right here was the last time we broke. We had 3-4 days of sell-off. And then you've got this downtrend line breaking here. Again, you had 5 days of sell-off. And if we go back and take a look at the next RSI breakdown, it happened right here. We had a couple weeks of sell-off. So that, of course, is a concern. And the other piece is we got our MACD flipping, crossed over, and the histogram flipping negative. That, of course, is a bit of a concern. Also, a bit of a concern is the Nasdaq McClellan Summation Index. Let's take a look. We've talked about this a number of times here over the past couple of weeks. The area that's really important to pay attention to would be that 300 level. We did get a crossover positive last week, but it failed right at that 300 level. We are basically basing right here between that 2 and 300 level. Where this goes next is going to be very, very important. So we have to pay attention. As it sits right now, we do have a crossover to the downside, which again, we need to see follow through for that to mean anything, but that, of course, is concerning. And you look every time that we've had that crossover follow through, it hasn't been a good thing for stocks. This is definitely a headwind. That's kind of where we're sitting at. But until we break underneath that 200 level, I wouldn't be that concerned on the breadth reading. We're still in positive territory above zero, so we certainly have that as a positive. Let's take a look at the rest of the indexes now. The Nasdaq, very similar. Once again, we pulled down. We failed right at that 10-day moving average. RSI broke. MACD crossed over to the downside. But I mean, all of these indexes, even though we've had a couple, of ugly-looking days, so to speak, they're all above rising 50-day moving averages, and they're all above those breakout points. We talk about the Nasdaq, the S&P, and the Dow Jones. All right, still above that 50-day moving average, above that breakout point. Now, the Dow is the closest to having the 10 and the 20 flip. So the 10 moving average falling underneath the 20 moving average would be a short-term negative signal for sure. And last but not least, let's take a look at the Russell. The Russell had a breakout over that 1620 zone and immediately right back underneath of it, and we still are underneath of that zone. So this could be, we haven't seen real follow through to the downside to confirm it, but we have not stayed above that breakout level for more than a couple of sessions. So this is certainly set up as a potential false breakout. And again, I think that the Russell is a very, very important area of this market to pay attention to, because I do not think that we can have long-term participation without the mid and the small caps at least joining the party in some fashion. So this 1620 level continues to be very, very important for me to pay attention to, and we will continue to watch this moving forward. Now, in November, we had a big cluster of negative readings, and we went over a bunch of them in a bunch of previous videos. A number of Hindenburg omen triggered, the Titanic omens triggered. They're bifurcated split markets where you have, a couple of names running higher, indexes running higher, but a lot of blood underneath the surface, so to speak. There have been a number of times where more stocks have made new 52-week lows and 52-week highs, even though the indexes had still pushed higher. That's a bit of a concern. And when we take a look at this data, when we had clusters like we had in November, really there was only one spot where we kind of ran for a long time after that, and that was the late 90s. But in the beginning of 2000, we had that, and then of course we had that major pullback. And then again in 7, 8, we had those readings, we had that big pullback. In 14 and 15, we had a little bit of a pullback. During the time, this certainly felt like a major pullback right in here, but the market, of course, did head higher. Beginning of last year, we had this reading, and then we had that sharp sell-off, and here we are once again. So when we actually look at the data points themselves, they're not very bullish for the midterm. So we can see a year later, there's only a couple of times where it was positive, and even those that did have positive, there was a little bit of short-term issue with it. But when we look at those numbers, 2 months out, the market's only positive 30% of the time. But what's crazy is the downside risk is 9% against a 1.5% upside. And when we go out all the way to a year, yes, there were a couple of examples of positive, but there was some major pullbacks and some major issues off of these readings where, our downside return on average negative 20%, 19.4% versus 6.5% to the upside. So, really ugly and mid and long term potential there. From those readings. Now, it's just something we need to pay attention to. It doesn't mean that it's the end of the world, right? We could have another reading where it's like this, and we just run for another 4 or 5 years, right? So that certainly could be the case right here. But it is concerning, and when we look at 1 week, 1 month, 3 months, 6 months, a year later, those numbers are really ugly in that zone. So, again, just another reason to be cautious here. At the end of the day, guys, when we really just take a look at this, yes, we had a warning shot here. Have we broken down? No. Are we still above our all-time high breakout zone from a month ago? Yes, we are. The moving average is still moving up. Yes, they are. Yes, RSI did pull back down, as you could see, but it also held at the 50 line, and that is an important thing to think about. It's right in the middle. And that is a zone where sometimes RSI will pull back to, and then kind of use that as a springboard and turn around and continue to head higher. So a good example of that right here, look at this, is a 49 level right in here. We have that pullback, and it uses it as a springboard and continues to head higher. So that certainly could happen. Technically, when we look at things on a long term, it's very hard to be extremely negative when we're basically right at all-time highs and have continued to make a lot of new all-time highs. But of course, under the surface, we don't have participation from mid and small caps. We've had some breadth reading issues, and there are certainly some things to pay attention to. So we'll continue to keep you apprised of all these things in these videos. I hope you guys have yourself a fantastic week. And if you would like to get a hold of me here, guys, please feel free to reach out. You can reach me at 814-580-9881 or email me at mtedeschi at Perspective Wealth Planning, and we'd love to have a chat, answer any questions that you may or may not have. You guys have yourselves a